Welcome to the 2025 edition of ICT on PNC. I'm Albert Betts, Executive Director of the Insurance Council of Texas, and joining me today are two of our excellent government relations, legislative counsel, lobbyist folks. Introduce yourselves, please.
Thanks, Albert. I'll go first. Yeah, well, you did say two excellent ones, but we're also the only two, so I don't know if that. But
Well,
yeah, well, I am new to the audience. So John Schnautz, I have joined ICT late last year, October of last year. Was previously with one of the national trades, NAMIC, for about the previous 5 years, and prior to that, worked in both the House and the Senate for most of the very long time. Most of the 15 years prior to that, along with some time in law school. So, not new to PNC issues, but new to ICT and to our new function directly lobbying the legislature.
thank you, John. Angie?
I'm Angie Cervantes, and I have been around for 5 years, Government and Legislative Affairs Manager. This is my second session with ICT, but this is the first session that we are actively lobbying. So we're excited to get into it.
We are excited to get into it. We may have picked the wrong session to begin lobbying because there's a lot of PNC issues that the legislature is considering, but we're happy to be able to do it for our members. And we are a little over, we're approaching midway through session, so there's a lot to talk about. And today we hope to kind of give you an overview of what's happened so far, what's going on with the property and casualty discussions before the legislature. We are not a priority issue as identified by the governor or lieutenant governor, but we are top and center in many discussions in offices about what's happening with rates, what's happening with companies. You're all aware, rates have gone up over the last few years. So legislators are trying to find ways or at least have discussions about what can we do about the Texas market? Are we a strong competitive market? I think the fears of what we've seen in other states like California and Florida has driven a lot of the conversation here. And let me just start off by saying, thankfully, Texas is not. Our PNC market is not California and Florida. I think we're much stronger, much more competitive, and have done fairly well through what has been a very difficult time in terms of cost and losses. But let's talk about what the ledge is doing, what we can think about happening over the next few weeks of the legislature. So far, it's been very busy. I think we've enjoyed tracking over 600 property and casualty related bills, and the legislature has enjoyed filing about 8,600 bills this session. What what are your initial thoughts or impressions of where the ledge is headed on PNC and kind of what do you see driving the conversation? I mentioned earlier rates, but what else do you see kind of driving the conversation on property and casualty? John?
Yeah, thanks, Albert. Happy to go first on that one. So I think the first point you made is a good one. This is the first session in a very long time, probably more than 20 years, that PNC insurance has been as high a profile issue as it is. On the other hand, as you said, there really aren't the sort of low bill number, transformative of the industry kind of leadership level priorities out there in PNC. And we think that largely reflects the fact that outside of some tort issues on the auto and commercial side, especially, I don't think there's a great consensus in the legislature on what to do about these issues because they're hard to solve. And one of the issues that we've really emphasized starting way back before session to with all the legislative offices we talk to is if you want to do something on the rate issues, on the cost issues, we understand those concerns. You have to do something about projected losses because that's where the pressure is. That's why the market is doing what it's doing in auto and especially in homeowners, which I think is the main sensitive point. And then I guess just to clarify for the audience, you mentioned it, but just to point out, we are a little over halfway through the session now, and the key milepost that we just passed was the 60th day of session, March 14th, which is the general bill filing deadline. So other than local bills or bills that suspend all kinds of rules that don't happen very often, that's when the universe of bills is fixed. It stops expanding and it starts contracting as bills make their way through the legislative process, through committee hearings, through timelines that have to be met. And as the old saying goes, the process is designed more to kill bills than pass them. So I guess that's my initial observation.
Very true. Thank you, John. Yeah, it's you touched upon factors driving rates and legislative response to it. And so, not to make light of it, but unless you two have invented a weather machine and not shared it with me, that's what drives losses for the most part here in Texas. So, something we'll continue to work on. I know we spend a lot of time visiting with offices and trying to educate on the market, some of the factors driving the rate changes here in Texas. Just doing our best to try to educate, and we'll continue to do that. You mentioned priorities. The governor has his priorities, which he announced a few weeks ago. Lieutenant Governor had 40 priority issues this session, which he announced the last 15 or so in the last week. As we looked at those, you're right, some of that is about tort reform and stopping litigation abuse. There's some other issues that touch on insurance. They're not insurance issues. They do touch upon what we do. One of which is to use some of the premium tax collected to help with water funding, funding for water projects here in Texas. Water is a big issue here, particularly as now we're in a drought situation. Wildfire risk and mitigation. There's some bills that would help with the funding for volunteer fire departments, and then the commercial trucking litigation. So nothing directly on insurance, but matters that we are paying attention to because they do involve the industry. Let's speaking of time machines, let's go back a few weeks as we have a new speaker in the House. That necessitated some changes with or resulted in some changes in committees within the House. So we do have a new House committee chair, House Insurance Committee chair. That's the committee that hears property and casualty insurance. And Angie, you want to talk about some of the changes to that committee and some of the implications for our industry, as well as some of the other committee changes that impact lines of insurance like workers' compensation.
Yes, thanks, Albert. So we have a new insurance chair and a brand new committee with only several returning members. And so one of the challenges and opportunities I think that we have with this is that we have had to do a lot of education on PNC issues. And as John mentioned, PNC is really in the forefront more than it has been in other sessions. And so with new committee members and new dynamics, it brings on a whole new session. The way a chairman wants to run his committee, the number of bills that get heard, everything changes. And then another big thing, especially in the House, the Senate is largely unchanged committee structure wise. They swapped out one Republican member for one Democrat member, but otherwise, most of them have been serving on BNC for quite a while. In the House, they've also split up the jurisdiction of the workers' compensation and PNC issues. So that is now going to a new committee called the Committee on Trade, Workforce, and Economic Development. And there's a subcommittee on workforce issues, and that's where workers' compensation issues are going this session. So that's also a little bit different. So as we navigate the session, it's a lot of education and navigating these new committee members and processes.
Great, Angie. And like you said, House Insurance is fairly new. They've just begun hearings as we're speaking. And Senate Business and Commerce has actually held a couple of hearings already. So we'll continue to work with those committees and those committee members to educate on insurance, answer their questions, and provide testimony on bills moving forward. Let's talk about some of the issues that'll be heard or have already been heard by those respective committees. We're just going to kind of cover in general what the issues are, describe some of the bills that are out there, but at the end we'll tell our members where you can find more information on those pieces of legislation. So early on, we talked about members are concerned about what's happening with rates, what's happening with the Texas market. So a large part of what we're hearing as we talk to legislators is what can we do to better educate, inform, uh, provide information to consumers about what is happening in their community or their county or their zip code even on legislation that might help increase consumer knowledge. So transparency is, I think, John and Angie, the word we've heard a lot as we talk to members, particularly about as consumers may have to shop around, or if they're not renewed, or if they're trying to find a company to write a coverage for whatever risk they have, and are having to search maybe a little more than they did in the past. So let's talk about kind of what I think it's the forefront. Let me know if y'all disagree of this discussion is a recommendation made by the Department of Insurance regarding providing some additional information when a consumer is not renewed, or if a policy is canceled, or if a coverage is declined or an application is declined. Let's talk a bit about that biennial recommendation and the notion of transparency.
Yeah, sure, Albert. I can go first on that one. I think you're right. It seems like transparency has become the word of the day, week, month, entire session, and part of that I think is driven by the other issues that could really impact cost are somewhat harder to address. Passing legislation that just says, well, give people more information is simpler. And the TDI recommendation, we've been engaged on that for several months now since it was first laid out back in early December. And the idea of that recommendation, there are already some provisions in current law that require, on request, require an insurer to give notice of the reason for a declination or a non-renewal or a cancellation. What TDI's recommendation would do is make those requirements mandatory. One of the interesting things about the way it got rolled into legislation is the main motivation for this bill seemed to be about homeowners, to a lesser extent auto, and maybe some commercial lines, but what actually ended up in the bill is considerably broader. It impacts a lot of other P&C lines. But the general issue I think we've been trying to push there, the genesis of the recommendation was if you provide more information to policyholders automatically, then maybe that information is actionable, that they could either do some mitigation or use what they learned to shop. And of course, that's true in some cases. It won't be true in many other cases, but we've been trying to sort of keep that recommendation manageable. Just because more information is out there, we need legislators to understand that always comes at a cost. Sometimes it's simple, sometimes it's more complex. This one is more complex. And the other issue we've been dealing with as the Senate version of the bill works its way through the process is it's also turned into a reporting bill more so than it was. There's a desire for TDI to have a statutory requirement to do more detailed reporting on these issues than they do now. We haven't really opposed that in concept, but we are really concerned about the execution of that and what may be some unintended consequences there. And so we're working on that to try to keep all that manageable. We think this bill is going to pass in some form. I don't think that's a stretch, but the form in which it passes is important. And if it goes too far, that could have implications for the market. And so we've been trying to educate legislators on that and help them see where we have concerns, why we have those concerns.
Oh, well put, John. I know this is one being a TDI biennial recommendation. It is of interest, but as we talk about how do we help consumers make decisions in the marketplace, I'm always reminding, I know we're always reminding that thankfully in Texas, you have choices when you're shopping around. And if for some reason, a company that you have makes the decision about renewal, you at least have the ability in homeowners with 160 plus companies, or in auto with 170 plus companies to shop around and find what works for you. So yeah, you're exactly right. We'll continue to work on that and trying to find something that's workable that serves the interest of consumers, but also works well for companies who have to comply with this. Speaking of consumers, let's
Compliance.
compliance and consumers. Let's talk about appraisal, the appraisal process that exists in almost all auto policies in some form or fashion, exist in all homeowners policy. But for the last two sessions, it's been a lot of discussion about the right to appraisal and what appraisal clauses need to look like in insurance policies. Um, and again, to clear up, almost all auto and home policies have some appraisal provision within them that TDI has reviewed and okayed. But we're discussing that now. There are various bills. I won't go into the exact detail of each bill, but they vary from generally mandating an appraisal policy, appraisal provision within the policy. In some cases, shifting the cost of who pays for the appraisal, depending upon the outcome of that. In other cases, laying out in homeowners, for example, a detailed process and timelines for how appraisal happens. So I know a lot of discussion. I think legislators are really keen on the notion of let's make sure an appraisal provision exists within policies. And I know we're working on that issue with legislators and other stakeholders to find something that's workable that won't lead to some abuse of the appraisal process, won't unnecessarily inflate appraisal clauses, but also lets companies design appraisal provisions within their policies that works for them and the consumer. So a big issue, I think something we'll likely pass on this in some form or fashion, and we'll continue to work on that. Artificial intelligence. Um, this is actually us talking, just so everyone knows. This is not AI generated conversation, but a lot of legislative discussion on AI. John, you mentioned phrases that are being used quite a bit this session. AI is one of those, and even pre-session. I think as we wrestle with the world changing and try to figure out what is AI and how does it impact insurance, we're seeing multiple bills on that subject. And the perception of AI and how it's used in insurance is sometimes interesting. I'll turn it over to either of you who want to comment on AI and what we're kind of hearing from legislators and some other groups about what does it mean and how does it impact insurance.
Yeah, don't mind starting that one off first. If I offend AI with any of my comments here, I apologize in advance if it's listening. No, it's one of those issues that it seems to have gone from 0 to about 500 miles an hour in a few years. I mean, I don't know that there were any significant bills related to AI even last session, certainly not the session before. And we haven't done a count, but it would probably be in the few dozen bills that touch AI in some
I think
respect.
there's over 20. So
Yeah,
yeah.
so a couple dozen at least. And it seems like the most sweeping one, or the one that will probably get most of the legislative attention, is a House priority to some extent, just based on its numbering. It's got a fairly low bill number in the House, and it's sponsored by a representative who had also previously been involved in data privacy issues. And we had a lot of discussions with his office because this is a broad AI bill, applies to all sorts of different industries. It's not selective. And like a lot of the AI bills around the country, it was sort of premised on this idea that if you use AI and the results of that have disparate impacts on protected groups or political viewpoint or anything else that the bill might heap into that, that then you have to do something to try to either mitigate that or not use AI or whatever the case may be. So the effort we really made there was to help their office understand, the insurance industry doesn't, a disparate impact statute or standard doesn't apply to the insurance industry broadly, and it really can't in a system where we use risk-based pricing, which of course the insurance industry does, at least in P&C. So I think we've had some success there. The version of the bill that now seems to be moving forward is considerably narrower. It's really focused on intentional uses of AI that might result in discrimination, but that was the reason AI was being used, sort of as a proxy for intentional discrimination. Obviously, no one's doing that in the insurance industry, so we're trying to look at that new language and see, where our strategy goes from here. But essentially, it's been an educational effort to try to get everyone to understand AI as a tool. Its deployment in insurance is still relatively new. We don't know exactly where it'll go, but you can't have a different standard applied depending on what tool is being used.
That's a very good summation, John. I know we're all a little nervous about AI because, as I joked, AI literally could be doing this podcast right now instead of us. But I think that misconception about AI somehow changes how companies do business is something we're definitely trying to clear up. And it's not as simple as AI takes away the human interaction that has to happen as well with whatever it is, underwriting, pricing, creating policies, et cetera. So continue to work on that, and I think we'll survive AI. But
We
definitely going to
won't be taken over by the robots. Yes.
well, I can't promise you that. Well, that's far down the line. It has nothing to do with insurance. It will not be insurance robots, whatever robots they are. Pretty sure of that. Speaking of robots and cars, let's talk about, yeah, I'm trying to segue here, folks. Work with me. Let's talk about the various bills dealing with uninsured drivers and the consequences of not having insurance and being involved in an accident. Some very interesting proposals out there. They vary in scope, but what are your thoughts on kind of what those bills are intending to do generally? And how might these perceived in a market where we are hoping to get the number of uninsured drivers down, also having an auto litigation issue, but in the meantime have to balance the interest of the consumers as well as those who don't have insurance. What are your thoughts on those bills?
Sure, there's a handful of those filed. It's not to the extent of AI, but it's all of a sudden this issue has shown up with a vengeance. I don't think a bill had been filed on this for several sessions, but yeah, just to table set, there are a handful of states around the country, somewhere around 10, I think, that have existing statutes that limit the ability of uninsured drivers to recover from at-fault drivers in accidents. Most of them have exceptions if the at-fault driver is intoxicated or other circumstances, or the uninsured driver maybe just became uninsured if it was a short-term issue. And the theories of those bills, couple of things. I guess one is just fairness in the auto insurance system. Everybody is supposed to be playing by the rules and driving around with at least the minimum liability. That's, of course, protecting their liability, indemnifying them, but also helping protect the other motorists. And it's kind of a social contract thing. Everybody should be doing that. And if you're not, you're sort of free riding on that system, and maybe you shouldn't be able to recover at least certain kinds of damages. And then the second idea is that the bills actually encourage people to purchase insurance, because if they don't, then they can't recover. I don't think there's a huge amount of evidence from other states that it makes some huge difference in the uninsured percentage. There's so many other factors that go into that in other states that it's pretty difficult to isolate that one. Conceptually, I think this is a sort of bill that we might support, from the fairness standpoint, at least for other drivers and those sorts of concerns. But we are trying to kind of manage expectations. This is not some sea change in auto insurance. There's no reason to think this would significantly bring down auto rates across the board or something like that.
Not the silver bullet, but
yeah, exactly.
I'm impressed you managed to bring a little philosophy into this, the social contract. Nice job. Let's talk about silver bullets. Another little segue here. What's the silver bullet to reduce rates? That's one of the big discussion points we've had throughout pre-session and during session. And I don't know if this is a silver bullet, but there is at least a proposal, a bill proposed to consider, multiple bills actually, to consider changing our rate regulation system to prior approval. Texas is follows use, as I'm assuming our listeners know, but some discussion about moving to a prior approval system. There's multiple bills. Some base it on a 5% increase. Anything above that requiring prior approval. Another bill has a 10% threshold. Uh, those are interesting. The rates aren't driven, or rate increases are not driven by regulation. At least they're not here in Texas. So these discussions are ones we anticipated might come up heading in the session, but I think they'll bear watching to see where these discussions go. As we talk about how the Texas market works and what TDI's role is in rate review and or approval under this system. But these will bear watching because it will be a fundamental shift in Texas rate regulation for the first time in over 20 years. I don't know if there's anything else y'all can add to that commentary, but I would urge all of our members to keep an eye on what happens with that discussion. Even if nothing passes, the discussion itself is going to be interesting. All right. Another interesting discussion, tying. This is not bundling, as it's often been described, but prior to session, some concern, particularly out of the DFW area, of companies requiring policyholders to purchase another product. For example, if they had homeowners requiring them to purchase auto to renew or vice versa. And so that has raised a lot of concern about consumer choice and the fairness of doing so. So we have a bill that was proposed to prohibit, I think the bill actually says prohibit bundling, but it means prohibiting tying. And we also have a rule by the Department of Insurance to prohibit tying. They're both progressing simultaneously. We're working on both. Generally, we're looking at, particularly on the rule, some of the scope of the authority of the agency to place the prohibition in Chapter 541 of the Insurance Code, which is the unfair trade practices provisions. And then on the bill, just trying to find something that's workable for that bill author as well as the industry. So this has gotten a lot of media attention. There's not, I think the report in the legislative hearing is there may be two companies that may have been engaging in this practice. So it's not a widespread industry issue, but it is drawing a lot of attention. And it's something to see where this ends up in terms of legislation, or I guess even administrative rulemaking. In the event a bill passes, just so we're clear, whatever rule the department is now considering would be subject to that legislation, that statutory change. So we're waiting to see what happens and how do we deal with whatever change comes out of that. I'm going to ask y'all to talk about TWIA, the Windstorm Insurance Association. This is the residual market for wind and hail on the Texas coast, 14 coastal counties, and a portion of Harris County. Let's talk a bit about some of the TWIA funding changes. We have a House and a Senate, a House version and multiple Senate versions, which take on very different approaches to this problem. Who'd like to sum up very quickly what's happening with TWIA funding, as well as some other TWIA operational issues?
I'll take that since nobody's knocking down the door. Yes, there's multiple bills on TWIA. On the House side, a bill got refiled that was actually filed last session that the industry supported that aimed to shift TWIA's funding and their reliance on debt financing, which is one of the big problems with it being unsustainable. On the Senate side, there are several bills filed by Senator Mays Middleton out of Galveston. And one is, I guess you could say, a TWIA omnibus bill that has various changes. I think the most significant for us are what they do to change member assessments and how those would be calculated. Um, some would increase it and then move the assessments into different funding layers to put them before the debt financing. And then also the calculation of TWIA's 1 in 1, right, currently 1 in 100 PML to lower that. How they how they determine their disaster funding are two aspects of those bills. And then they have other things such as moving TWIA's location to the coast, and other changes like that. But we're looking at those bills and working with the members and seeing what comes this session. And I think it'll be interesting too because there are two different approaches from the House and from the Senate. And ultimately, to get anything, we have to get a consensus of both.
You're right. And a consensus on TWIA is always interesting how we get there. I want to go back. You commented that the TWIA funding structure is unsustainable. Let me explain that a little bit. Was the funding structure right now, since it relies on up to $1 billion in debt, public securities that TWIA could sell to pay losses if need be. I think in the long run, as this industry is explained, that is not sustainable. Given that debt has cost to issue it, I think $8 to $10 million for each bond that's issued, plus the interest in repaying over time those loans. So it's something I think the industry generally supported some notion of let's find another way to fund this without all the debt on TWIA's, on the TWIA, ultimately on TWIA policyholders who would be subject to some surcharges and certain levels of debt funding, but also maintaining the industry's $1 billion in potential assessments commitment that we've had for a number of years. So you're right. The consensus on TWIA will be interesting. And some of those notions on the Senate side raise our assessment amount, which is concerning, but it's something we'll be talking about and working on moving forward. And I'll note for the listeners, typically we'd be almost leading this conversation with TWIA. That tells you kind of the change in tone or tenor of this session, as well as some of the other issues that have come up given concerns about rates and in the marketplace.
It almost cracked the top 5 these days.
It does. It's still important to us, but it just gives you a sense of what's going on. Let's kind of talk about credit scoring. I know the Office of Public Insurance Counsel also had a set of recommendations to the legislature, and one of those involved companies reviewing their policyholder credit scores on a more regular basis. John, you've done a lot of work on that already this session. Can you comment on generally what that is and where we are with that proposal?
Sure. Just do so briefly. This is a good example of the sort of bill that in the tenor of this session, we are trying to work very hard to have be something that the industry can be okay with or even supportive of potentially. So the idea of the OPIC recommendation is there are some provisions in a national credit use of credit and insurance model that was adopted by the National Council of Insurance Legislators, or NCOIL. Oh gosh, 20 years ago. It's been readopted every 5 years ever since. One of the provisions in there relates to how often credit information should be updated, either by default or if the policyholder requests an update. And so those provisions are in the national model and they're not in Texas law for whatever reason. So we've been working with OPIC just to make sure that the actual bill language matches as close as possible to what's in that national model so that companies don't have to go to a lot of extra time and expense to comply with a very Texas specific requirement. So we're not done with that effort yet, but we're making progress, and the goal is to get to something we could be okay with.
Good. Thank you, John. And I'll mention a couple other topics that are out there. One is continuing education or changes in continuing education for public adjusters. Also, some discussion of some regulation or regulation of appraisers and umpires in the appraisal process. So that's also something we're taking a close look at. And then we have a new roofer registration bill that's out there. This is something I think, Angie, your old boss was involved in as far back as 2009, if I recall. It's not
Yeah.
been able to be passed, and it's something that would be of great interest in terms of at least helping root out and prevent some of the fraud that happens in roofing contracting after major storms that hit Texas. So just mention those as items we're keeping an eye out on. There's a lot of other issues we could have talked about today, but we wanted to just hit the high points or low points, depending upon your point of view, I guess, that are being discussed this session. Members of ICT can keep up with those updates on our website or through your member access. If you have not logged in, you can and get your credentials so you can keep up with everything during session. We update every week, and there's a lot going on with hearings and changes, so it's a good way for our members to keep up to speed. Session ends June 2nd. We are literally almost halfway through. The next major deadline will be May 12th, which is the last day for House committees to report House bills. There's a lot left after that, but that's probably the next deadline that we're paying attention to. We'll do another podcast update later in session as we can really talk then about things that either are looking like they're going to pass or things that we know at that point may be on life support. No bill is ever dead. That's kind of the rule until the session ends, because things can always be amended or brought back to life. But a lot of good work. Really appreciate John and Angie's efforts this session in helping us as we have stepped into the lobbying arena. I want to thank all of our members for their input as we look at issues. And again, I hope you enjoyed this very brief overview of what's happening. But these are some very important issues. And if you are an ICT member, feel free to reach out and update us or give us your thoughts on some of these issues we've discussed. I want to thank John and Angie for their input today. Thank you all for listening, and we'll talk to you soon. Have a great day. Thank you. Bye-bye.
Thanks.
Bye, everyone.